What is up, you guys? Nick here. It's Friday. We finally made it, baby. What an ugly and frenzied trading week it has been. It's been filled with volatility, broad market emotional sell-offs, movement of electric vehicle shares like we've never seen before, fraud allegations, record-breaking delivery announcements, concerns over delisting Chinese stocks. Could there have been a way for a more chaotic 5-day trading period? Let's hope not. I want to dedicate this video to zooming in on NIO and looking at a rare charting pattern that looks like it may be coming to fruition. How will shares react once the delisting fears have subsided? Once the short sellers retreat back into their caves or holes or wherever those creatures live? Once the record-breaking delivery month they just had is fully realized? And once the hype towards NIO Day and their newest vehicle launch begins to brew? This correction has been a lot of things for NIO, and for me personally, I think it has been a perfect window of opportunity to buy shares at a bargain price. We have a lot to get into in today's video, but first, Webull has increased their promo. They are now offering 4 free stocks worth up to $3,700. When you 1. Sign up, 2. Open an account, and 3. Deposit in at least $100 using the link in my description. They are a 0% trading platform with some of the best analytics in the game. I use this app every single day, guys. It's really awesome. If you haven't already, hit that subscribe button. I will be covering the entire lead up to NIO Day and the unveiling of their newest vehicle, the EE7. I will be keeping you all informed with up-to-date movements. You don't want to miss any of that. Smash the like button for the YouTube algorithm, and without further ado, let's get right into it. Alright, so NIO is now sitting at the low 40s. What is going on? After a substantial 5-day trading loss. Now, this general pullback was to be predicted as NIO and other EV stocks had seen intense valuation increases the previous month, with their market caps absolutely bursting at the seams. Something was going to burst this bubble back into a correction, and it happened to be who else but our favorite villain short seller Hindenburg Research. I don't even want to know how much money these guys make every time they short an EV stock, but people follow their word like gospel and basically sell all their shares anytime they open their mouths. They previously detonated Workhorse's stock price into 1,000 pieces and tore through an entire EV industry by accusing Candy of fraud allegations. Now remember, these allegations aren't yet proven in court, and these allegations weren't aimed at NIO. So when these shares started plummeting through no fault of their own, I started buying, and will continue to do so if and when these shares continue to fall. Long term, gang, where you at? Alright, I want to get into this rare charting pattern we are seeing quietly form right now. A bit of history first. If we zoom out and look at NIO's chart pattern from July, immediately before it broke out, we see the classic cup and handle bullish pattern, a great signal to go long on a stock. Shares then spiked in late August, passing buy targets, catalyzed by analysts' bullish outlook and other EV competitors enjoying buy ratings from big name banks. This prompted the 8-week hold, which brought us investors to mid-October, when on the 14th, after another prominent analyst buy rating, shares absolutely popped a whopping 23%. Shares continued to increase up to $55.70, a whole $10 higher than where shares are currently hovering, and have since fell back down, nearing their 21-day exponential moving average. However, what many analysts think may be brewing is an outstandingly rare formation termed a high tight flag. Now, this is a situation in stock trading where investors would typically feel the need to pull their shares as a recent abrupt surge has occurred and the masses are profit taking, and we see a sharp decline in share price. As we can see in NIO's share price, from October, shares have doubled, over 100% gains, and we now see the ensuing correction with a pullback of around 20%. It's at this point, hence the high tight flag, that stocks can see a drastic increase in price yet again, skyrocketing 100-200% off this pattern, as investors' interest is suddenly reinvigorated off the stock caused through a catalyst. Writer and IBD founder William ONeill states in his book How to Make Money in Stocks, which is a fantastic read by the way, many stocks can skyrocket 200% or more off this pattern. Now, this is indeed seeming like it could be forming, as many investors are remaining buying shares and are seemingly impatient to move forward with the company and the stock. The record delivery month of November has investors holding and waiting, instead of a full sell-off taking place. The high tight flag is sort of akin to the center of a hurricane, where after a frenzy and chaos and damage, there is an odd eerie lull before and immediately immediately after this chaos. This is the period that we may be currently in right now. Now, the high tight flag is a short-term charting pattern, and although charting patterns are useful in the short term, we as investors should also be focused, more so at that, on the long-term business prospects of a company, and I for one am. Remember that NIO's business prospects and direction and fundamentals have not changed whatsoever since the sell-off. All that's changed is shares moving average day and profit taking, and sellers selling because sellers are selling. This is all involved with the idiosyncrasies of stock trading and not business fundamentals. We as investors need to keep our eyes focused on the future and what this company could become. It's for this reason that I do see this pullback as just another reason to purchase stocks essentially on a fire sale. As this company gears up for its EE7 release, poised to be unveiled at NIO Day in early January, investors will be eagerly purchasing up shares in anticipation. If we go back to NIO's last annual NIO Day, that was on December 31st, 2019. In this day, we see a steady increase leading up to NIO Day itself. If you weren't following NIO at the time, at this point they were actually battered and bruised and nearing bankruptcy. However, there were small shimmering lights of hope looming in the distance. Wow, that was deep. NIO unveiled its first SUV coupe model, the EC6, that would ultimately begin deliveries later on in the year in September, and is proving to escalate month after month in its ability to deliver. Share prices went from a low of $241 prior to NIO Day and shot up to a high of $487 after opening bell after NIO Day. This is more than a 100% increase in one trading period. Shares continued to climb to $529 in the days after NIO Day. And the rest is history. Because NIO's unveiling of their newest model, the EE7, their first sedan on their vehicle roster, I do not think this is currently being discussed enough or fully priced into their share price as of yet. We have seen other rival EV Chinese companies who do indeed have a sedan on their roster, and time again, it is these vehicles that are delivering the bulk of the units. XPeng's P7 is doing incredible quantities of deliveries and continues to do so on an ever-increasing basis. I would not be surprised in the least to see heavy moving day averages, heavy volatility, and potentially a doubling of share price if this high tight flag formation comes to fruition. In the coming days and weeks leading into the close of the year and the new sunny days of 2021, shareholders are looking forward and looking into the intense promise that this company holds. This company has so many massive prospects in place for 2021, including their first full year of having battery as a service implemented, lowering their barrier to entry point. This also allows additional consumers to feasibly purchase a vehicle, especially in the emerging economy coming out of the health situation. Their expansion plans into Europe, where they believe they will be able to deliver thousands of vehicles within a 1-year period. Their expanded partnership with JAC Motors manufacturing plants. This will be able to increase their capacity output to an impressive 7,500 vehicles per month and will continue pushing this number throughout the course of the year, and their continued pursuit for achieving L4 autonomous driving technology as they continue to unload cash into the research and development division. NIO Power is also poised to have a huge calendar year 2021, as their stations strategically placed around mainland China will be able to pull in large sums of cash from every single battery swap transaction. I do think that this will become an increasingly large portion of their total revenues in the coming quarters. There is so much short-term and long-term to like about this company currently, and like I previously stated, I do think the share price is an absolute fire sale when zooming out into the long term. We are long-term, gang. That's who we are. We are invested for the future, not what's currently happening to the share price. And you should look at these fluctuations in U patterns as buying opportunities and not selling off because other investors are through emotions. Anyways, everyone, thanks so much for watching. I really do appreciate the continued support. Smash that subscribe button if you haven't already. I really would appreciate it. Hit the like button for the YouTube algorithm. Do not forget about the Webull promotion, up to $3,700 in stocks for free when you sign up, open an account, and deposit in at least $100. This is an absolute no-brainer, guys. Webull offers some of the best analytics in the game. They are growing at a rapid pace. They are 0% trading platform. It really is just a win-win. Anyways, everyone, I will be keeping a close eye on NIO in the coming days and into next week and into next quarter and next year and forever. So make sure to hit that subscribe button. I really would appreciate it. See you all in the next video. Cheers.